All right, look at the Dow. It's racing ahead, well into record territory yet again. Other market averages following suit amid all this turmoil. A guy who knows a little bit about stepping back, looking at the big picture, might be able to explain this. I'm talking about my friend Ben Stein, who's written another beauty on just the magic of investing and sticking to it over the many, many years. The Capitalist Code, the author Ben Stein. Ben, good to have you. What do you make of that? I mean, normally you would think in terms of a terror attack, whether foreign-induced or by one lone nut, that at the very least markets would be rattled. Not so. What do you think?
Well, markets have to do with interest rates and with the amount of money being earned in corporate profits, and this psychopathic, nut, villain, evil person has nothing to do with that whatsoever. It's incredibly, unbelievably sad, unbelievably sad how many people died and were injured, how many families are broken up and tortured by this. But it has nothing to do with corporate earnings, it has nothing to do with dividends, it has nothing to do with earnings before tax, it has nothing to do with interest rates or returns on comparable investments. And the fact is that in those areas the economy is doing very, very well. And as is usually, but not always true, stocks are a very good place to be. It allows, owning stocks allows the average person to be a business owner. I mean, you don't have to just be a painter or a cab driver or a teacher or a lawyer. You can be a business owner, and that is a wonderful, wonderful place to be, because then you have income coming in whether you're actually working or not, and that's what you want.
You know, someone had said if this had been an ISIS attack, maybe we would have reacted differently. If this had been a 9/11 type attack on the financial center, for example.
I don't think so.
You don't think so? Okay.
No, I don't think so. I don't think so. I think it all has to do with corporate earnings. And this is a gigantic country. Let's remember, this is a country approaching 350 million people, roughly, very roughly $20 trillion GDP. I mean, this is an attack which is a terrible, terrible human tragedy, and it's unbelievably, unspeakably terrible. But in terms of how it affects the overall economy and overall earnings, it has absolutely nothing to do with it whatsoever. Nothing. I mean, it's a big, big world out there where corporations are concerned. You can buy into it, become like the equivalent of a small business owner, a medium-sized business owner, and these terrorist attacks don't really affect you. I mean, obviously, if there's going to be one with a nuclear weapon, God forbid, that's going to affect it plenty, but that hasn't happened yet or even close to happen.
All right, and there's nothing like a 9/11, of course, and the overall environment is better. But you're a big believer, in reaction to this notwithstanding, just the power of time and just sticking with something. So you're not a market timer per se, just someone who advises you stick with it and you follow through with it. Now, there are a lot of individual stock pickers out there who I know you countenance very, very lightly, who say that you're limiting the return they could otherwise get. You say what?
I say that you cannot beat just buying the indexes. Even the most brilliant analysts, even those brilliant stock pickers, even those highly paid stock pickers at the biggest investment banks don't beat the indexes. You just have to stay with the index. It's very, very inexpensive to get in on it, and it allows you to do that best of all things, be the equivalent of somebody who's inherited a business from his father or grandfather or grandmother.
But you were
wise
enough to go and invest in what this guy Warren Buffett was doing. Warren Buffett praises your book, but there are the facts. You know, if you did that, and rather than a regular index, you'd be much more richly rewarded, right?
Well, Warren Buffett is a 1 in a billion shot. I mean, you're just not going to find any more Warren Buffetts. He is.
Well, Mark
Mobius
or Peter Lynch or people like that. It was similarly.
No. Peter Lynch was an indexer, and none of these people compares with Buffett. I mean, Buffett is the ultimate weapon in terms of investing, and even Buffett. I'm privileged to know Buffett and to count him as a friend. And even Buffett now says if it were up to him, and it is up to him, he would just be buying the indexes at this point.
You only like him because he praised your book. I don't believe your praise is genuine.
He has praised me in many, many ways, and I love him a lot.
As he should.
He also says buy the indexes and stick with them.
So when you say that,
and stick with them.
But let's say you're in your 40s or your 50s and you haven't done that. Now what do you do?
Start doing it right away. It's funny, I got a letter from a boyhood chum, a very, very famous journalist, who said, is it too late at 73 to start doing it? And I said, it's never too late. It's better to start at any time than to never start. Just get in on it. Get in on the fact that you can become a businessman and a successful businessman by buying little infinitesimal pieces of the most successful businesses in the world, and you just do that by buying the indexes. Now, I know you and I have some friends on on one of your other fantastic shows who mock me and belittle me and make fun of me and tell me I'm ugly.
You heard that? We thought we had
that.
your IFB closed. I didn't. All right. But Ben, here's what I want to say. I mean, when you hear cases of financial impropriety, I know there are few and few in between. But what's going on Capitol Hill on the Equifax thing and the Wells Fargo thing, and a lot of people say, see, it's a rigged system. These guys are rigging the system, and this is just what's going on. And they talk about the meltdown and all this other stuff and say, these guys rigged the system, and the little guy gets screwed. You say what?
I say over long periods of time, the little guy does incredibly well, does as he deserves to be, which is to be well rewarded for being patient. Buffett says you will get very rich in investing in stocks, but only if you're very patient. So be patient. Yes, you're going to have some bad apples. Yes, you're going to have some theft. I spent a very large part of my life covering the Drexel milk and junk bond fraud.
Sure.
And so I can tell you there's some very bad apples in there. But I can also tell you that over long periods of time, holding the indexes and just holding on for dear life and then passing them on to your children and grandchildren is a very, very good way to go.
So much of your wealth has come from stocks or real estate. I know you own a lot of real estate. So where does it mostly come from?
Well, I wouldn't call it wealth. I would say moderately well-to-do. But it comes from
Ben,
stocks
you have
mostly.
the GDP of a country.
No, I don't.
Yes, you
say
do.
that to me all the time. You're making fun of me because I'm old.
I think it's a lot of real estate, too. I don't dismiss your stock portfolio.
No, it's a fair amount of real estate, but you're making fun of me because
No, I'm not.
old.
I just find you're avoiding my question. You know? It's kind of sad.
Well, I've done a little bit well on both of them.